Ladies and gentlemen, welcome to the main event.
Let's go.
Round one. Fight.
Thank you for tuning in to the Crypto Street Podcast. Here are your hosts, Killer Whale, Prince, and Crypto Dale.
And remember to tip your waitress.
What is up, everybody? This is Crypto Dale. You're tuning in, as if you already didn't know, to the Crypto Street Podcast, based out of all of our parents' basements, mom and dad's. We're all not all together tonight, unlike normally. Prince is up in Canada land. Killer, what's going on, buddy?
Hey, dude. Chilling. You know, it's a nice day here as usual in California. So I'm enjoying life. Everything's good.
You know, one thing I want to touch on quick is we were talking earlier. I can't believe California doesn't have bugs like we do in Iowa.
Not
It
nearly
just blows
as bad.
my mind.
It's the humidity. I think. We get like the occasional mosquito, but it's not like a huge problem in summer like it is in a lot of places.
It's just nuts to me.
Yeah.
That's awesome. I mean, it looks like I'm going to move to California because we get eaten alive by mosquitoes. Prince, how you doing, bud?
Living. Can't
Living?
complain.
What do you think of these markets?
Another day. Yeah, they suck.
Just
But you know what else is new?
depressing.
But you know what? BitMEX got a new swap on there, the ETH
Yeah.
USD swap, and that has me pretty excited. So
Yep. It's we're recording those listening on August 2nd. Got that OKX liquidation thing that is looming. When is that? A couple hours from now?
I'd say from as we're recording now, it's probably in about 7 hours, I believe, and it's worth about 2,337 Bitcoin is just hovering out there on the order books, waiting to get filled. Otherwise, a lot of people are going to be taking a loss.
That's
It looks like
disgusting.
a little ridiculous. Yeah.
Insane. I mean, it's just literally lost for words. But I'm lost for words because I'm about to get liquidated. Is what's happening.
Are you really
Me too,
surprised
bro.
though because it's OKX?
No, I'm not. I'm not.
You know,
surprised
it's
at all.
like we watched them literally like they blew out their their contracts. I'd say a month ago or so
Yeah.
to the downside. Like it just dumped. Like
Yeah.
I think $2,000 or something like that randomly, and they had to close the market down. So are you really surprised? I'm not. This is just another day, OKX.
Yeah, another day, another dollar. That's why I don't have any money on it. All right, so tonight's guest, everyone listening, as you can tell, I've read already, it's Alan Curtis. He is the CEO of Radar Relay. So, Alan, thanks for joining us tonight.
Yeah,
today.
thanks, gentlemen. Thanks for having me. Looking forward to it.
So, generally start out with just kind of giving everyone some background of yours, how you got into crypto, kind of then we'll lead into what Radar Relay is and how you got that going. But let's just start with how you got into crypto, what was intriguing to you, etc.
Yeah, sounds good. Do you guys want the short version or the long version?
Long version.
Okay,
Yeah,
nobody
the best version
picks
is the
that
long
one. All right. So you've got to rewind the clock a few years. I was in undergrad, and I was studying econ, very similar to many folks in the crypto space. But I had this special focus, this bent, and that was this idea that opportunity, while talent is evenly distributed, opportunity is not. And I was so focused on understanding how we could solve this issue and solve this access problem. And so I started doing a lot of work around economic insecurity, looking at developing countries, trying to understand why there was such volatility and such forceful, violent economic insecurity. And of course, that led me down this rabbit hole. I ended up at the Smithsonian in DC researching currency. And I found my way to a big old golden Bitcoin in an exhibit. And I was just absolutely perplexed. And of course, then immediately fell down the rabbit hole. But I didn't immediately start working in the industry. I was still sitting on the sidelines for a while. I ended up as the program director of a big incubator out here in Colorado where Radar is based, called Innisphere. I was there for 3 years and helped a whole bunch of companies raise money, build their teams, get to market. I was building up a lot of those operational skills, execution skills that eventually would lend themselves well to getting Radar off the ground. So unlike many of your guests, I'm not a finance guy, and I'm also not an engineer. I'm a pretty simple operator. Like many of your listeners, I approach this space with a beginner's mind.
Mm-hmm. That's how you got to approach it.
Oh, absolutely.
It's always changing.
Yeah, absolutely.
Yeah, and it lets you think for yourself rather than just be influenced by all these opinions.
And it allows you to get into your user's mind a little bit. So we have this this culture at Radar of sort of customer first or user first, and this empathy that sort of overrides all the decisions that we make. And it turns out I get to be that user very often, right? Because I don't know how to code, and I certainly wasn't on Wall Street, so I can dog food the platform ourselves or test the platform ourselves.
Yeah,
nice.
Sure.
And I think one thing before everyone's always talking about big mass adoption and stuff like that, and I think the biggest challenge that we face in cryptocurrency for that is a lot of these white papers and products and everything are extremely technical. And when my dad first got invested in this, that was his biggest complaint was I spent 5 hours, not really, but just saying, I spent X number of hours reading this white paper and having to Google what all these terms meant. And he's like, if this has to get big time, it needs to get dummied down to the standard and, new person, retail investor. So that's good to hear that that's what, Radar Relay is about. So.
Yeah, maybe this is a good segue to talk a little bit about the vision and versus the mission, which are two very different things, and both are connected to some of my personal background. So, like I think you said, your dad, I approach these things with consternation and confusion often, and so I didn't understand why there wasn't a soft landing. And what I mean by that is, right, an onboarding mechanism or an on-ramp to this wild and crazy space that we're living in. So that became the what, right? The what for Radar or the mission is onboarding the world to the token economy, which we can talk all about. But what's more important than that is the why, and that's right, the vision behind that. And that's a function of my background, which is around this talent is evenly distributed, but opportunity is not, and self-agency and self-efficacy. And so we took this really powerful vision around providing opportunity and access. We packaged that up with a really clear mission around onboarding. So when we think about onboarding the world, that's exactly what you just talked about, is how do we get non-technical folks? How do we get older family members? How do we get maybe laggards on the innovation curve? How do we get them spun up in this space? So that's the onboarding the world piece. And then the token economy, this is the part of our mission statement that folks often find confusing. And maybe some of your listeners are skeptical when guests talk about the token economy. And so I just want to unpack it a little bit, maybe break it down into really basic terms. So when we think about the token economy, it's really the intersection of two systems. The first system is tokens. No surprise there. There's really only 4 types of tokens. There's utilities, securities, currencies, and collectibles. And then there's the second system, and that's the exchange. It's either mediated, like you see on many of the exchanges that you know and love, Coinbase, Circle, Binance, et cetera, or it's peer-to-peer, like we've built with our first product. So it's the intersection of those two systems, tokens and exchange, that creates the token economy. And so our job as a company, right, our mission here is just to build the pipes, build the infrastructure, build the roads, the scaffolding that's going to connect those two systems.
Great. So let's just dive in a little more. Maybe people listening don't know what Radar Relay is. If you had a 30-second, obviously you can go longer than 30 seconds, but if you had an elevator pitch to give to someone, what would that be? Maybe load it up a little bit. Sure.
Yeah, I'll do the quick pitch, and then would love to zoom out and put it in context. So think of Radar Relay like Craigslist. If you've ever bought or sold your couch on Craigslist, maybe you wind up meeting some stranger in a sketchy Walmart parking lot. You make the trade. You go about your way. We're very similar in that regard. So unlike Craigslist, unlike trading your couch, you're actually trading tokens, and you're doing that peer-to-peer. And instead of meeting in a Walmart parking lot, you're actually meeting directly on the Ethereum blockchain. But the core functionality is the same. Like Craigslist, we're a bulletin board. Like Craigslist, our role is to help folks make trades, in this case, wallet to wallet. So that's the 30-second elevator pitch for you. If you haven't used Craigslist and maybe you're international user, you'll have to check it out. It's a pretty wild experience. But to put it in context, which I think is even more helpful, is to talk a little bit about the exchange evolution. So in the early days, many of us were trading crypto on some of the first few centralized exchanges, things like Mt. Gox. And if you all had a PTSD moment when I said Mt. Gox, I apologize. I know some of our team members. I can't even bring it up anymore. But so in the early days, we needed exchanges that were very centralized to handle transactions, adjudicate transactions, create a safe sandbox for people to show up and use this new asset class. But of course, over time, that security model, it hasn't seen much innovation. And so therefore, we've seen these tragic hacks where hundreds of millions and I think actually, $2.3 billion now have been lost over the last few years. Yeah. And it really pulls on your heartstrings. It's a tragedy. But in the wake of that tragedy, there are brilliant, scrappy, opportunistic entrepreneurs who have been there to A/B test all different implementations of new exchange technology. So you've seen things like Ether Delta. You guys may have used that. It was a smart contract-based decentralized exchange. And they were able to use Ethereum's escrow technology in the form of a smart contract to facilitate that venue. And so I was a user there, right? I was sitting on the sidelines and I was looking at that as a big step forward from a reduction in operational risk for users. I thought, hey, that was a great idea, but man, was it hard to use and slow, and it didn't
clunky. Yeah, exactly.
Yeah, but serious props to Zach, the one-man band who built that whole thing. I mean, the guy is certainly a legend will be in history. And so we looked at that and we saw that's not enough, right? That was a great step, but it's not the complete solution. And so we were wondering, what is the spark that would usher in this new third category? We didn't know what the third category was. We didn't know what that spark was, but man, were we thinking about it and researching. And we found our way to the 0x protocol, which we can talk about in just a moment. But what the 0x protocol allowed us to do was build this bulletin board that I just talked about, a relayer. And that's Radar Relay, our first product here. And so unlike the other two categories, the centralized exchange or the smart contract-based decentralized exchange, in our case, you trade directly from wallet to wallet or peer to peer. There's no smart contracts. There's no losing custody. The funds stay in your wallet at all times, whether that's a web wallet or a hardware wallet. So we felt like that was the spark that the industry needed. And so we've created a category, and it's a relayer. It's not an exchange, right? We don't call ourselves, we're not Radar Decentralized Exchange. We were very disciplined in how we decided to name our category. As you guys probably know, over the years, as you've engaged with new asset classes, new technologies, or new categories, they've been very focused on framing the problem, creating the vocabulary to describe that problem, and then guess what? You end up owning that solution. And so we don't feel like decentralized exchange is a noun. We feel like it's a verb. And I think the imprecision around calling us a decentralized exchange is not quite right, which is why we've gone with Radar Relay. So there's the little bit longer than 30-second version just to put us in context.
That's all good.
So if you could just I think 0x is a protocol and a coin that a lot of people are interested in. I see a lot of people talking about it. A lot of people like it. Can you dive a little bit more into how it works and how it works with relayers to form this decentralized peer-to-peer exchange atmosphere?
Certainly. Yeah, happy to. So if you rewind the clock back a few crypto years ago to June of 2017, and you imagine we were in my basement, my team and I, and we were thinking about this idea of decentralized exchange as a verb and what could we do? And so we actually started thinking about building our own protocol before we ran into the 0x team. And when we met them, it was very much love at first white paper, and it was a great fit from a vision, mission, values perspective. And so we ended up deciding to divide and conquer, and instead of trying to create another protocol, that they were going to build something really elegant, and we would just build dApps on top. And so what is 0x? It's really two things. It's two pieces, two intersections, two systems. The first is messaging. So messaging meaning around orders. So, how many tokens do you want? What token do you want? How long is the expiry of your order? What price? All of those order parameters are cryptographically signed, and that order intent is sent to relayers like Radar to be hosted off-chain. And the second part of 0x is the pipes. Right now, those pipes are in version 1, right? So those pipes are smart contracts. So version 1 of the pipes right now, version 2 is coming soon in September. And over time, those pipes are going to get pretty rusty, right? Maybe this first implementation doesn't have the gas optimization or the batch cancel or the atomic swaps that version 2 or version 3 or version 4 is going to have. And so we need a way as a community, not just Radar, but as a community of other relayers, other peers, token holders, dApps, anybody who's using this protocol, who's standardizing, we need a way to agree on which pipes need to be pulled out and need to be removed and need to be upgraded. So they tied a bow around this whole protocol and they issued a token. And this token is a governance token that we all get to collectively agree or disagree on if those pipes need to be aluminum or PVC or polyurethane or if we want to leave them. And so the elegance of 0x is that it's just messaging pipes in a governance protocol, which is, it's simple enough for guys like me to wrap our heads around it and build large, enduring companies. Because we know that if this space is going to continue to grow, and we believe deeply that it will, everything that can be tokenized will be tokenized, and we will need standards like 0x to be interoperable.
I really think it's interesting that you're coming from, I mean, you have a background that's fairly related in economics. You know, it's because the game theory behind a lot of these cryptographic assets and how they work and the incentive structures, that stuff's probably pretty up your alley, you know, in terms of economic theory and behavioral finance and that sort of thing. But I think it's super important that, you know, you're not coming from a coding background, because I see a lot of projects that, you know, they're so technically adept, the people behind them, that they don't really get what like the average person needs or wants in a product. They don't realize how dumbed down you have to make it for, you know, the average 40 or 50-year-old to use it. I always use the example of my dad getting a hardware wallet, and you know, me telling him like, you should transfer your stuff from Coinbase to this, and he's just like, it'll be gone from Coinbase if I do that. And I'm like, yep, it'll be on your hardware wallet though. And he's like, nope, not doing it. It's just like I'm telling you, it works. Like, so what have you guys done to make that as palatable to the mass public as possible?
Yeah. So the school of thought, right, that I'm from is this idea of around diffusion of innovations. And if you look at this bell curve of how innovations diffuse across channels, from innovators to, you know, from enthusiasts and innovators to early adopters, how does that happen? And the cool part is that we don't have to reinvent the wheel here, right? We can go back and we can look at other technologies, whether that's payment processing or credit cards or genetics or drones or 3D printing. Like, we can go back and we can see what expressively happened in order to cross that chasm. And there's some tough questions in the crypto space. You know, one question is, do we want people to learn these new user actions the same way that Mark Andreessen taught people how to use the back button and the address bar and refresh? Like, do we force people to learn these new user actions, or do we abstract that away credit card style? And nobody, frankly, understands what's happening with the payment rails under a credit card. And so at Radar, you know, we're trying to cover both of our bases. And what we mean by that is we're creating user interfaces, we're creating educational tools to try to meet people where they're at. I don't need everybody to go, you know, read applied cryptography textbooks to show up. That's just not going to scale. But under the hood, I do want to have tools. I want to have tools that other dApps can use, other partners can use to abstract it away completely. So a user just shows up, click a button, everything goes exactly like they would expect. There's no SHA-256, there's no private key management. And I think that's going to take a while. But I think when we solve for that, right, when we make it so frictionless and such a managed user experience that the early majority can do it, that's an inflection point. And that's what success looks like. And that's what the token economy is. Token economy is not everybody walks around with, you know, memorizing 256 digits and, you know, sharing secret passwords with 17 of their friends. So we think really hard about how do we cross the chasm? How do we build technology that's going to get us there? And that's why we're a brand, Radar, that's just going to spin out multiple products over time. Radar Relay is just the first start there.
Maybe if you can dive into that a little bit, maybe what's coming in the future. You don't have to give too much away if you don't want to, but perhaps some ideas you guys are throwing around or things you're looking at.
Yeah, sure. So I'll just piggyback right on that last little rant I had. So if you believe that anything that can be tokenized will be tokenized, and if you believe that dApps are unstoppable and dApps are coming, it doesn't matter which blockchain they're on, it's just they're here to stay, and it's only going to be exponential, then that presents a pretty serious problem. That means for you as a user, if you show up at a dApp, you're expected to hold that dApp's token to engage. And I do not think that will work at scale. I think that's untenable, frankly. We can't expect users to hold hundreds of thousands or millions of tokens, or we can't expect a user to come and want to use XYZ new application, and then say, oh, hold on, let me go to Binance. Let me go get that. Okay, now I'm back. So there's this idea here of token processing. And that terminology probably sounds familiar because we ripped that directly out of Stripe's playbook around payment processing, right? What Stripe was able to do with just 7 lines of code to give developers tools, we want to do the same thing with tokens. So when a user shows up at a dApp, CryptoKitties, Augur right now, but in a decade from now, who knows, right? When they show up, they just trade with ETH, they trade with US dollar coin, they trade with DAI, what doesn't matter. And under the hood, that dApp engineer is using our SDK, our toolkit, to do an on-the-fly token processing action where they're dipping into our global decentralized liquidity pool and surfacing the right crypto economic incentive or token that's relevant for them. So the dApp goes home at night and they got paid in the token they want. The user goes home at night and they're a happy camper. They didn't have to worry about token management. So that's one product class, right? That is very much an automated toolkit or an SDK that's for dApp engineers. And then we have a whole other suite of products, or the whole other side of our business that's continuing to build front ends or retail user experiences for new asset classes like securities or like collectibles or even currencies. And so, as I mentioned in the preamble here, as I was introducing Radar, that there's 4 types of tokens. We've already built the utility interface. That means we have the 3 more. So you can expect some continued innovation there around the retail experiences.
I think people are going to hate me for bringing this up, but liquidity is always a big issue with decentralized token. I know you don't really want to use exchanges, but decentralized exchanges. I'll just use that term since I think it broadly covers a lot of what we're talking about. But 0x is a little bit different in that regard because it has all these different relayers that can kind of pool liquidity, if I'm not mistaken, right?
Yeah, and I think I know where you're headed with that question. So, first of all, I don't have some sort of vendetta against the decentralized exchange as a term. I think it's just efficient, and I think it's part of the parlance of the industry now. So totally get it. But to your point, yes, liquidity is a challenge. So if you rewind the tape back to Ether Delta, I mentioned a few minutes ago, at its peak, Ether Delta had about $20 million a day in daily volume. They had about 20,000 users. And so what happened there is during their demise, during their downfall, those users still needed places to go. And so that liquidity got fragmented. It got fragmented across all these different venues. Radar, IDEX, Bancor, Kyber, AirSwap. There's probably 10. There's probably 10. So the volume is actually still the same. It's still around $20 million a day, still around 20,000 addresses, maybe, or users, maybe a little bit more. But it's just been fragmented. And as you guys know, fragmentation is hard, right? It's confusing for users. It's confusing for automated traders. It's confusing for tokens. So that presents liquidity challenges. So if you look at like the daily volumes or the aggregate volumes, we've been really fortunate, really humble to be very successful there. Since we launched in October, we've traded over $150 million in aggregate volume. Now that's less than Coinbase Pro does in one day, and I get that. But it's also quite the accomplishment for this very nascent category. So within 0x, to your question, to your point, you have, as a relayer, you have some business decisions and you have some architecture decisions to make. One of those is, do you want to build, it's called an open order book or a closed or central matching engine. So that's a fork. It's a fork in the road. And if you choose the open order book side, you can hold hands and share liquidity, and it's a big happy family with all different relayers, and we can pass liquidity back and forth. And if you choose the other strategy, it's very siloed, and you're opting to be on an island. And so, we chose the former strategy there, but there's not quite other relayers that are liquid enough for us to share with them. But there are many relayers that we love that they're sharing our liquidity. And so you can go today and you can look at some like ERC Dex or Bamboo Relay, and you can find a great, phenomenal example of what success will look like ultimately in the 0x community. And that's this idea that a rising tide will lift all boats, and the phenomenon of networked liquidity. And that if an order or if a user in Australia who's trading on Bamboo Relay is brand new, and Bamboo Relay is brand new, and they don't have order flow in a certain token pair, they can actually pull that from Radar, but it's still surfaced on Bamboo Relay. So that's I think that speaks to your question there about order sharing.
Yeah, for sure. Thank you.
Yeah, so maybe just to go maybe one click deeper on the liquidity, because usually a follow-on question is, okay, well, how do you get more liquid, right? Is probably what you're thinking. So when we launched, our first 1,000 true fans were retail users. Right? They were guys who had been burned before by centralized exchanges. Maybe they had lost funds. Maybe they're just not okay with the operational risk inherent in many of these other venues. So that was our first 1,000, right? Those were the enthusiasts that were there. And then as we grew, we started to welcome these innovators who loved the idea of trading from their own wallet and loved that we had DAI as a stablecoin pair, and they loved our branding or our ethos. And then over time, we've started to pick up more and more retail traction. And then just recently, we've sort of hit the bottom of the hockey stick, if you will, in terms of the growth curve around onboarding automated traders.
Mhm.
So, I think just this last month, we just pulled our analytics. I'm going to mess up the number, but it was something around like 15 or 20% of our volume was actually from brand new automated traders just in the last month. And so we're starting to get that volume spun up a little bit. So moving forward in terms of how do we get liquid, it's getting firms like prop trading firms. It's getting small groups of guys in these, it's a quant and it's a financial engineer who have built algorithmic trading and arbitrage strategies. And so this over the next back half of this year, really focused on meeting those firms who are doing that automated trading, educating them on the benefits of this category, this venue, so we can become liquid and start this great liquidity migration from centralized exchanges over to relayers.
I would imagine that's somewhat of an uphill battle, convincing all these traditional finance types and companies and educating them to the point where they can at least make a decision, right?
Yeah, that was it. I think uphill battle is definitely a euphemism for how hard it is. It's tough. It's so you might imagine. So I'll bring you into a real situation, right? So we're in a few weeks ago, I was in New York, very large financial institution. If they know it, Ethereum, or they understand how Ethereum works, that's great. We're off to a really good start. Almost everybody understands Bitcoin. They get it. Their nephews won't shut up about it. And then, if they understand Ethereum, we're on a good trajectory. Then we talk about the state of venues, and I walk through very similar continuum or evolution that I described to you guys. And then they bite, and then they're interested. So then the follow-up, right? So the meeting is usually over by then. The follow-up is, hey, we had some of our engineers go look at your venue. What the heck is an Ethereum node? What is Ethereum node infrastructure management? Who is Infura? Where is Amazon Web Services in this picture? And so there's some technical firefighting there. And then there's the follow-on question of liquidity, right? It's like, well, hey, I'm so used to going back and forth from GDAX to Binance. Like, I don't understand. Why aren't you guys as liquid? And then, we have to talk through our roadmap. We have to walk through the value props around operational efficiency and self-custody and wallet-to-wallet trading. And that whole process, that takes weeks, if not months. And, we really just started on that, sort of pouring gas on the fire there coming out of beta just a few months ago. And we now have a full-time business development director in New York helping me get that done. But it's certainly an arduous process.
So, Alan, where is Radar Relay headed? Let's talk a little bit about the roadmap. Just kind of give everyone an update on that.
The roadmap is headed in sort of two different directions. The first direction is vertical integration. And what I mean by that is continuing to release and build infrastructure, both vertically up and vertically down. So vertically down, that means getting faster under the hood, working with our friends at Infura, improving some of the sort of DevOps situation, very technical things under the hood. And then moving vertically up, that's where we think about how do we make better onboarding experiences? How do we translate this in more languages? How do we create maybe more infrastructure, like better wallet infrastructure, or work with MetaMask to make open source contributions? So that's the part of the vertical stack.
Yeah.
One more I'd throw in the vertical stack as well. And that's this idea of adding advanced financial instruments. So things like derivatives, things like repurchase agreements or lending, margin, whatever wild and crazy financial instrument you might imagine would make its way to a relayer, we'd like to have there. And then when we talk about horizontal, this is really when we talk about new protocols and new blockchains. So, you guys might remember this idea of the FAT protocol thesis that was in vogue for forever, I guess, in this space. I understand that as a lens to view the industry, but it's interesting when you're a DApp and you own the user experience and you own the customer and they trust you, you have a relationship, you can actually go and colonize or go and settle new blockchains and new protocols. And so as we think about going horizontal and things like Cosmos and Lightning and Polkadot, and we're going to be there first. And we're very focused on planting these flags. So think about horizontal is really around cross-chain and exploring other platforms and other blockchains.
Great. All right. I think that kind of covers all of the questions that we had, Alan. Is there anything you'd like to address or speak of that we didn't ask?
Oh man, yeah, sure. So a few things. First of all, terrific questions, and this is a blast. You guys have clearly done a pretty thorough job thinking about some of the challenges in this space. So first would be a plug for decentralized venues in general. This is not about Radar, right? I mentioned a whole bunch of other cool projects: AirSwap, IDEX, Bancor, Kyber. The plug for anybody in the audience here would be the next time you're going to go make a trade, just pick one of those. Just go pick one and go try it out, but then take it a step further. Actually get in touch with that venue, whether it's their Telegram, their Twitter, their email, and give them some feedback. What did you like? What did you not like? If it's about liquidity, tell us. If it's about UI, tell us. If it's about a certain token pair, please tell us. So that would be the ask is some skin in the game for your listeners. And then maybe the second ask would be around some of these other emerging areas. I think the NFT space is just utterly fascinating. And as we talked on this call about soft landings, and we talked about technology that could cross the chasm, I think it could be the NFTs. I think the NFT could be that floppy disk moment that we saw with the AOL floppy disk that brought America online. I do think the NFTs have that potential. We saw just a glimpse of that with the CryptoKitties phenomenon. But I would encourage listeners to go check out the Nifty community, NFTY, or the Nifty Magicians, or any of Matt Condon's work, and lean in there, because I think that's how we get some of our laggard friends and family across the finish line.
Sweet. That's great. All right. Well, we thank you for being on the show, taking the time out of your busy schedule, Alan. Look forward to seeing what you guys can do. We were impressed with everything, obviously, or we wouldn't have had you on.
It was awesome. Thank you.
So again, from us, thank you. I hope everyone can head on over and check it out.
Yeah, thank you so much, guys. This is a great opportunity.
Thank you, man.
Yeah, you bet. Thanks everyone for listening. Like I said, get over there and check it out. RadarRelay.com. Head on over there, check it out. Get these markets turned around, everyone. Thanks for listening. Tip your waitress. Peace out.